Welcome back. I'm Pratap here. Today is 1st May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And the training videos you can access from our NeoStock YouTube channel. So go to the NeoStock YouTube channel, click on this community section. There I have provided the link where you can access the playlist having all the training lessons in an order. So click on this link and you will get into supply demand zone price action course playlist. And then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training lessons you can access one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel, it will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis of the high liquidity zones. Actually, I'm supposed to record this video yesterday, but I was a bit busy, so I couldn't. Anyway, I thought today is a holiday. So I thought it is okay to postpone. I know some of you are waiting for this video because even some of you also put a question in the comment section. Like you are able to fine tune at higher time frames, but you are struggling a bit in the lower time frames. So I didn't understand why you are struggling in the lower time frame. If the zone is not clearly visible to you, don't ignore it. Don't take a trade in that stock. Why do you want to take risk? Because I understood. Some of you are probably you're trying to compromise and you're trying to draw the zones. Don't compromise. You need to compromise and draw the zones at the maybe 15 minutes or 75 minutes level so that to find the order flow in the lower time frame. But if you are compromising and drawing the lower time frame zones, that is a big risk. That is a quite risk. Only few special scenarios only you need to compromise and draw at 5 minutes time frame. But otherwise make sure 5 minutes time frames the zones are very clear and neat. Because the order flow should be visible to you clearly. If you don't know how to draw the zones in the low 5 minutes time frame, that means the structure is not clear. Then assume there is no zone in that. Forget about such kind of trades. Better you avoid drawing the zones, compromise and drawing the zones at 5 minutes time frame. Don't do that. Only you draw compromised zones either 15 minutes or 75 minutes to identify any order flow inside that when you fine tune. But I understood some of you people are trying to compromise and draw the zones at 5 minutes. Never do that. That is very, very dangerous. Make sure your 5 minutes zone structures are very clear and neat. That's it. Simple rule. And also make sure the zone confluence is there in properly. Try to prefer the zone confluence near the proximal line or in the middle of the zones of 15 minutes time frame. Near the distal line of the 15 minutes time frame, think twice before you accepting that zone. It will work sometimes, but there are higher risk will be there. Because you need to get some experience to understand those scenarios. Anyway, we will see. Probably after how I fine tune the zones, after you look into that, probably you will understand the mistakes what you have made. And one more point I noticed, some of you are, I don't say how many of you are really following, but definitely by seeing some of your comments I am understanding you are not properly following the risk management. From the beginning I have been saying risk management is very, very important. If you are not following the risk management properly, you are doing a big mistake. In a particular day, if you don't get a trade, there is nothing harm. It happens. At least 2 or 3 times in a month you won't get the trades properly. So why do you want to take a trade on every day? The high liquidity zones, I am talking about high liquidity zones. If sometimes high liquidity zones may not give you a trade, there will be some adjustment times for the high liquidity point of view. Market adjustment will take place. Those days probably your stocks may not get the trades. Such kind of days, just ignore, just watch and ignore. Why do you want to take a trade every day itself? At least in a month you will get a minimum of 15 trades, you will definitely get. Don't expect a trade every day. If the zone is not very clear, don't try to adjust something and draw a zone there. Never do that. Make sure your zone are very clear and neat, especially at 5 minutes time frame. At least these points you should follow. If you don't follow, definitely will face problem. Always give importance to the risk management. Never trade against the risk. Make sure minimum 1:3 RR is there. Experienced people, at least if the enough RR is not there, they will try to adjust the risk and other zones. But you don't do that at the initial stage. You need some experience for that. There should be proper reasons while you are adjusting within the zones. I'll show you. I'll give you an excellent example today. If you are misusing the concepts without experience and every day trying to take trades, obviously you will get into the trouble. First, let me start with Bank of Baroda, because this is the only one stock that is having a good order flow after we fine-tune the zone. Not only good order flow, even from this zone, we also have a rejection towards the down. Order flow, that means definitely there will be strong order flow in this area. Even then, this is failed. Even then, you would not have taken this trade. There are strong reasons why you should not take trade in this zone. There are strong reasons. You already learned all those reasons. But you are ignoring. Some of you are ignoring them. Blindly ignoring. How you are ignoring, I will show you. I found 2 reasons why we should not take trade in this zone. I don't know how many of you observed those 2 strong reasons why we should not take a trade. But everything looks very perfect. Sometimes institutions may trap us like this. But if you would have stick to your fundamentals, you would have saved from this. According to me, this is not a valid trade. Why it is not a valid trade, I will tell you. First of all, this is a drop 1, 2, 3 base candles and again a drop candle. Drop, base, drop. Actually, this is a daily zone, right? Yeah, sorry, it's not 75, it is a daily zone. So we have a rally, 2 base candles and a drop. And if you look inside this, we have a 75 minutes. This is the one. Drop, 1, 2, 3, 4, drop. But we adjusted within the zone itself, because we did not consider the wick. And next, again this 75 minutes fine-tuned with 15 minutes time frame. We have a rally, 3 base candles and a drop candle. This is the 15-minute zone. Inside the 15 minutes, again we fine-tuned with 5 minutes time frame. See here, we have a rally candle, 1, 2, 3, 4 base candles and a drop candle. So this is the fine-tuned 5-minute zone. Here we need to plan our trade. See, earlier prices came and before getting into this zone, there was a rejection and came down. Maybe this is an indication there could be a strong order flow. So it is justifying our trade. All these are all positive signs. So they will be telling you it is a good area where you can plan your trade. But see, the zone is easily violated. Why? What is the reason? The reason could be maybe institutions might have cancelled their order flows from this area, or maybe they created a situation like this and they want to trap us. We never know. There are situations zone will be failed. But you cannot take this trade. That is what I am trying to say. Everything is perfect, still we cannot take the trade. The reason is risk management. It doesn't have RR. The minimum RR is not there. Look into the 15 minutes time frame. We have a rally, we have two base candles and again a rally. If you draw a zone like this, demand zone, we say we don't have RR. Hardly you will be having 1:1 or 1:1.5 RR will be there. Let me show you. Short position, I am using this short position tool. Some stop buffer, approximately I am keeping. Maybe we may add some more also, but minimum level, just roughly I am adding. Entry, let us assume we take exactly at this zone. I am not adding any entry buffer. So I am trying to keep as much as less possible. And this is our target. Even if you take type 2 proximal profit if you want to target still. See what is the RR you have? 1:1.3. For one risk, 1.3 reward you get. What is that you are looking for? Minimum 1:3 RR. When you don't have the RR, how can you plan a trade? This is my first question. Now you should ask a smart question here. Actually, this is not the target. The reason is this candle is not completed by the time it is entering into the zone. Generally what happens? Prices, this is a big candle. Because it is closed, already the action is completed. Because the action is already completed, now we are able to tell this is a zone. But at the time our prices are entering into this zone, definitely this is a large candle, but this is not completed at the time. It just reaches this supply zone. Immediately, let us assume the order flow is very strong. Many times what happens? The candle again it will come down, come down, come down, come down. We see a big rejection. Mostly we will see a failed ERC candle. So definitely this is not a valid zone. With a failed ERC candle, if the candle is coming and closing very near to this zone, we cannot consider that as a leg out. From the zone, at least a significant body should be there. But anyway, let us assume it is coming down and closed somewhere here. Because many times it happens like that. Prices go to the zone and the order flow it will push, and again immediately the prices will be coming down and this candle will result as a failed ERC candle. That's why what we do, we take a trade. Because the price action is completed, now we are drawing the zone and telling the RR is not there, it is 1:3. 3 is not a good zone. If I tell that, my argument is a wrong argument. Okay, then what is the valid zone? 15-minute zone. This could be your valid 15-minute zone. This is the one, the below. Before this candle happens, let us assume the candle is not there. Let me close. Before getting into this, let me close this using a replay bar. What I do, see, this could have been our price action before entering into this zone. So you will be planning your trade like this, right? You would be planning your trade like this before price action. See, what is your expectation? Prices will go, and after reaching this particular supply zone, immediately price will go down. So that's why drop, base, 2 base candles and a rally candle. This is going to be your target zone. This is how you plan your trade. If that is the case, your target is going to be this 15 minutes demand zone. Probably we may get a sufficient RR. You may be thinking like that. Let us see that. Let me extend up to this 15 minute zone. Okay. Now you see what is the RR. You have 1:2.8. Still the RR is not sufficient. Okay, for experienced people, 1:2 point is enough, but before they accept, they might be having other calculations to reject this. Why they are having other calculations to reject this? Because they are experienced people. Let me tell you that reason also. Experienced people also, why they reject this zone, I will explain later. First, after completing this. For you, at least a minimum 1:3 RR should be there. Your RR is not there. See here, this is how you plan before prices. Now let me open this replay bar. Let me play. See, now market is proceeded further. See the rejection. First there is a rejection and immediately it went. Have you noticed? Let me show you in case. See here, prices started, see the rejection and again came down and again moved up. The order flow pushed, but that is not good enough. But prices didn't reach up to here. It came and again moved up. Everything happened. Okay, one reason why you should reject is minimum RR is not there, even the zone, 15 minute zone below this. You have a drop, base, rally. This is the one, your RR is not there. That's why you need to reject from your point of view. A minimum RR is not there. And another reason why you should reject this. The reason is risk. The risk of this particular zone, the supply zone, the risk is more than 2%. 2.3% risk is there for this zone. When you have 2.3% risk, what is the maximum acceptable risk? That is what we learned in lesson 18 or lesson 19. I didn't remember. One of these lessons you might have learned. Risk, the risk management, position size, all those concepts you learn. At the time in that session I told you, never accept risk more than 2%. So you cannot take a trade because risk is more in this zone. If due to any reason, if the stock fails, your stop loss will be more than your accepted risk. Then you may do another argument to counter my argument. You can say, then I do one thing. What I do? using this position tool, this short position tool, see what I am doing. Now I will reduce the risk by moving my entry more deep inside. See, now you got 1:5 RR you got. If prices reach this area, then only I take a trade. This is what you can argue. Definitely, because anyway it is pierced, the zone is violated, definitely your entry would have been triggered, and after that the zone is violated. You may see how I achieved 1:5 RR I achieved by adjusting my entry. See, such kind of adjustment you have to do only if you have a good experience. Just like that you cannot do such kind of adjustments and manage the risk every time, unless you are an experienced person. Few scenarios I shown you earlier. There are strong reasons why I have adjusted. Maybe I would not have explained you because your experience is not good enough to understand those scenarios. But definitely those who took trade in this and stopped out, now today's my explanation definitely will understand. See, while doing this short tool, see, actually this is supposed to be your zone, this is supposed to be your entry. The fine-tuned type 2, this is the type 2 proximal entry. The type 2 proximal itself, it has given 2% risk, 2.3% risk. That's why I am saying we should reject. Now, your argument is, why can't I reduce the risk? Why can't I take more deep entry? This is a valid question, right? Instead of taking near the type 2 distal, I am going more deep and taking the entry. But while you are taking such kind of entry, you have to do a very good study. Really the order flows where exactly it is. Is it good enough? Where you have to do that study, further go to the lower time frame. What is the current time frame? 5 minutes. The current time frame is 5 minutes. So what you should do, further go down. 1 minute level, see where exactly the order flows. And for this kind of adjustment, what is the adjustment? I am moving my entry instead of here, I am moving this tool. I am making sure that at least 1:5 RR is there. If my prices enters into this area, I will take a trade. Suppose the order flow is very strong and prices did not reach up to my adjustment area, it come down. Anyway, I will miss the trade, it is okay. But still I have taken a trade, it is stopped out. What is the reason? You may ask this question. See, such kind of adjustments, blind adjustments you should not do. That is what I am trying to say. If you just like that because you are achieving RR, if you do adjustment and if you take a trade, that is a blind adjustment. Don't do that. Do some research further. What is the research you have to do? Go to the lower time frame, see where exactly order flow is there. If you are doing that kind of adjustment, if there is no lower time frame order flow within this area, there is no meaning in adjustment. If prices come into this area, definitely it will be violated. When you know definitely it is violated, why do you want to take a trade? This is my question. Really in this area, within this small area, if you have 1 minute order flow, definitely you can accept your judgment. But here see what happened. I am going to the 1 minute time frame. Let me go to the previous data where I adjusted 5 minutes, fine-tuned 5 minutes. Yeah, here. See, where is the order flow here? 1 minute. You have a drop, you have a 2 base candles. So your zone will be like this. 1 minute zone. That means real order flow is here. If this is, suppose due to any reason, prices go beyond that, easily prices will go away. There is no meaning in taking a trade above this zone. If at all, if you want to plan a trade, you have to plan here only. Now you can ask me a question. If that is the case, this is going to be my stop loss, 1 minute digital line. This is going to be my entry. My risk management is well managed. Definitely now I will get 1:6 or 1:7 RR I will get. But don't do that. Always your stop loss will be at the 5 minutes level. Who knows, institutions might have added some new order somewhere at the digital line. If prices go away and again it will come down. See, 1 minute order flows are not reliable always. Always remember. 1 minute order flow is only to support your decision making. But they are not for confirming your entry and stop loss. Many times 1 minute order flows will be violated easily. So that's why we stopped our analysis up to 5 minutes level. 1 minute you have to look if you have some kind of decision making to support your decision making. 1 minute is supporting you or not, that is what you have to do. See, this is the best example. If I want to move my entry a little deep inside, does it make any sense? That is what you want to confirm. Suppose I made my entry here. Let me draw a blue color line, you will get clarity. Instead of taking my entry in this blue color, now what I am doing, because the risk of this zone is 5 minute zone is more than 2%, what I am doing, I am moving my entry up to here. Somewhere prices reach, then only I want to take it entry. Otherwise I will ignore this stock, so that my risk is minimized and also I get more reward. This is what you are thinking and you are planning your trade. But actually your real order flow is here, in this drop based drop. In case if it is violated, there are higher chances this also might be violated. I am not saying it will definitely violate. There are higher chances. Institutions may keep some new order flow somewhere here, that possibility is there. They also may not keep, that possibility is also there. So that's why you, in this particular zone, you cannot change your entry. If at all your entry, it will be here only. Either here or maybe somewhere in the middle, further if you want to reduce some risk. But you cannot go beyond this. Currently what is the blue color you are seeing? You cannot go beyond and adjust your entry. You cannot keep like this. You cannot keep like this. Because there are no 1 minute order flows, clearly telling you. That means institution order flow may not be available here. May be available, but chances are high. They may not be available. The probability is high, because this is a probability game. So if at all, if you want to adjust within this, maybe somewhere in the middle. But that is a very small, negligible, the difference. It can't change much of your risk. So because of this reason, you have to keep your entry here only. If you are keeping your entry within this small area, there won't be any much risk management is not possible. So due to this reason, you have to accept 2% risk, but which is against our rule. This is another reason why you can avoid this zone. The first reason is you don't have the RR. Let me change to 5 minutes. The reason number one, you don't have RR. See here, you have only, I cannot adjust like this. I have to keep here only. I am getting only 1:2 point RR I am getting. 1:3 is not there. Okay, sometimes you may see, okay, anyway it is near to the 1:3. Only 0.2. That way you can compromise and you can take a trade. Sometimes. If that is the case, your stop loss you have to accept. But what is the stop loss we are getting? More than 2% we are getting. That at least that you cannot accept. Maybe RR, some level you compromised. Okay, close to 1:3, only 0.2 difference. Still you cannot take the trade because the risk is more than 2%. That you cannot compromise. But still you have one more point to argue. What is that one more point to argue? Okay, I don't want to take trade in F&O segment. Because if you are taking F and O, you cannot manage the risk. You have to accept the 2% risk. What I do, I will take in cash segment. What is the advantage you get in cash segment? You can do position sizing. Risk is high. But what I do, my quantity will be reduced. Number of shares. Whatever my accepted level, suppose my maximum accepted is only 1%. Instead of taking 100 shares, I will be taking only 50 shares. That way my risk management will exactly fit. Still I can take, but still that is also stopped out. You may argue. Yes, it will stop out. You have to accept. But still, there is a reason why you should not take a trade, even for this argument also. I have a reason why you should not take cash trade. Anyway, cash trade is an intraday trade only. You cannot carry the position. Intraday you have to close because it is a short trades. Long trade you can carry the position to the next day. Short trade within the intraday you have to exit. At what time you have to exit? By 2:30 or 2:45, your brokers will automatically square off your positions if you don't exit your trade. Let us say 2:30, your brokers are closing the positions. Any intraday you have to exit by 2:30 if it is a cash trade for intraday. Okay, when prices entered into this zone? At 1 o'clock 20 minutes. If you look exact time, if you want to look, when it entered, 1 o'clock 24 minutes or 23 or 24 minutes. That means close to 1:30. How much time you are having trading session? Only 1 hour. If you want to take a intraday trade at 1:30, you have only 1 hour to close your trade. At 2:30 you have to close, otherwise your broker will be automatically square up the position. Taking last 1 minute trade, that too doing position sizing when the risk is very high, and RR is also not really good. A little less than what you are expecting. When you have these many negative factors, that means these many factors against you, still you want to take a trade? Definitely I won't take. When I have those many negative things in this particular stock. You should not forget, the prices entered into this zone at almost at 1:30, 5 minutes before 1:30. That means you have only 1 hour time to complete the trade. The risk in this zone is very high. RR is also not good. A little less than 1:3, but maybe okay, it is a 0.2% less. Sometimes you may compromise, sometimes. If you feel the zone is excellent. And also at 1:30, the market momentum generally also it will be less compared to. So with these many negative factors, taking a trade is not at all advisable. Why I am telling you all these reasons one by one I am analyzing, at least it will be a learning to you people. See, morning 9:30, 10 o'clock or 10:30 or maybe up to 11:30, the way how you should treat the market should not be the same at 1:30 or 2 o'clock during the intraday session. When all the conditions are in your favor, then only you should go for the trades after 1 o'clock or 1:30. Please remember. So none of these factors are in your favor. Taking a trade is a high risky trade, very high risky trade. Anyway, the main reason why I am rejecting this trade is not the RR. The reason why I am rejecting is the risk in this zone. And the order flow I have seen, I cannot adjust the risk because the order flow is near the distal line. Definitely at the distal line only I have to the type 2 digital line. Only I have to accept the trade. I cannot move my entry because the risk is high. So this is the main reason why I want to reject this trade. Hope you got the clarity. How I identified? Because I went to the 1 minute and I have checked the order flow. The order flow is not there in the deep. The order flow is there in the proximal, very close to the proximal line. So that's why I cannot adjust my entry. If I am adjusting my entry means I am allowing, I know that the zone will be violated and still I am taking the trade. But why we are keeping the stop loss at the 5 minutes digital line? It is a hope in case if the prices are going, at least somewhere near institutions may keep some orders, again it will push the down. See here, that is what happened here, right? The price has just pierced and again came down. But this is not good enough for us. Where you take your entry till that level only, again it pushed. This is not a great push. But how much loss you would have got? 2.3% loss you would have got. Why do you expect 2.3% loss? It is a very big. First of all, 2% itself is maximum limit. Because 2% is allowed, there is no rule that every time you have to keep 2%. Sometimes my risk will be only 1.5%. My risk will be maybe 1.2%. Some other person's risk will be maybe 1%. The risk management or risk allowed risk will change from person to person. But maximum allowed is 2% according to our theory. But this risk is beyond the 2%. See, all these points you have to analyze. Risk management, what you learned so far is at the beginner level. Once your experience grows, every moment when you are analyzing your chart, how I can save my money, that is the way you have to always do that. First of all, you should find the ways to reject the trade. Before taking the trade, are there any ways to reject this trade? No, all the factors are supporting me. Then you have to go and accept the trade. First you have to think in a negative way when you are analyzing the chart. When you don't see much negative points, then you have to accept the trade. Mostly the trade will be a perfect trade. That's why I told you there are several reasons for me to reject this trade. Risk management is very, very important from the beginning. Why I introduced risk management in lesson 3 onwards, lesson 3 or lesson 4 in our training. Generally people teach risk management at the end of the course. But why I introduced in the beginning itself? To make you people understand how important the risk management is. That's why phase 1 training itself I introduced, that too in the early stage of learning our course. And after that at different stages, I've been talking about the risk management till the last lesson of our training program. To make you people understand how important the risk management is. But today, by seeing your comments yesterday, what I have seen some of you are just ignored the risk management and took the trades. Don't do that. Even if you miss a trade, not a problem. But don't deviate the fundamentals. This is what many people will do in the beginning stage and hurt your capital. Please don't do that. Risk management should support. And another reason also I have seen some people are, even the risk is small, still you are not taking trade with a fear. Okay, my trade will be stopped out. If it is stopped out, unnecessarily I will be losing 1% of my capital or 0.5% of my capital. Don't think about that 1% and 0.5% of your capital. That is the minimum risk you have to take. And you are taking 1:3, 1:4 reward. If it is successful, you are getting 4 times profit you are getting or 5 times profit you are getting. Next time, even if 5 trades are failed, still you will be in profit only. So when you have such kind of concept, why you should unnecessarily fear about losing the trade? Sometimes we lose, 1 or 2 trades we lose. And moreover, we have seen our failure rate is less than 20%. Our success rate is more than 80%. And you are ignoring that 80% success, thinking about the 20% failure. Don't do that. Because some people are, I've seen some people are asking me to take a psychology related session. There is no psychology here. Everything is risk management. Psychology is your fear only. Nothing more than that. Your fear of losing the money. But how much you are losing, that you are not understanding. How much you are losing is a very small portion of your capital. But how much you are gaining? A big portion you are gaining. If you lose 1%, you are gaining 5% profit. And even if you lose 4 trades, 5th trade will save you completely. But do we have that much failure rate for our system? No. When you don't have such kind of failure rate, then why you need to worry? Core strategy itself doesn't fail continuously 5 times. Core strategy means your bullish and bearish trade setup. Maybe at least there you get 60% success rate. Because that is the way we build our system, and we corrected and improved using price direction concept. We have improved the success rate of bullish trade setup. You have seen recently good number of stocks. They are giving profits in the DIT trades, daily income trades. And WIT and MIT, every day you won't get the trades. You should be very patient until you get the trade. DIT at least daily you will get. If not daily, every 2 days at least you will get 3 or 4 stocks. Same day you are getting. And our HLQ, anyhow, it is having more than 80% success rate. So why do you want to fear? Why do you want to, what is the right word? So you need to trust the system. And the fear of losing the money, that point you have to remove from your brain. You have to accept. See, you are accepting small amount of risk. Why do you want to bother about that small amount of risk? Suppose you fail, okay, let it fail. You lose only small amount. Next day you will get a success. Even if next day also failed, still nothing to worry. Definitely third day you will get success. That is what we are seeing in our high liquidity zones. And that day definitely whatever the loss you got earlier, everything will be covered, and also you get even more profit. Even next 2 trades also, if you lose, still you will be in profit only. Worst case scenario I am talking. Best case, failures you are seeing rarely. And some failures you can handle. This is one such kind of stock. If you would have done proper RR risk management, you would have avoided this stock just because of RR. One reason, even RR is very close to 1:3. Still, if you compromise here, you would have avoided the whole risk of this zone. You can't take the trade in this zone, first of all. Risk point of view, it is a very bad supply zone. Maybe the other price action clues are good, maybe. But our top priority is the risk. If risk is not allowed you can't take the trade. Even the other analysis is 100% perfect. So definitely this is not an acceptable trade. Those people who completed supply demand zone price action course and the risk management studied properly, definitely you won't accept this trade. If at all, if you are taking this trade, that is human error. It is not fault with the system. It is a human's blunder. It indicates you need to revise your concepts properly, especially risk management concepts. I am sure those who took a trade and lost, stopped out, it is a good lesson for you. Next time you won't make such kind of mistakes. Now you will realize the importance of risk management. I am sure. Now you will go and revise those concepts once again. Not a problem losing the money. You can assume you paid the money for your course fees and now you are learning risk management. That way you feel. Whatever the money you lost, that is the money you paid for your course fee. And now again you are learning risk management. That way you feel. Because it is a good lesson for you now. Okay, this is about Bank of Baroda. Hope you understood all the reasons why, several reasons I told you, why we can reject this trade. And also do not forget the timing when you are taking the trade. At what time are you taking the trade? When you are taking trade at after 1 o'clock or 1:30, you should focus more on the risk management. If everything is in your favor, then you can plan the trade. Okay, this is about Bank of Baroda. And Reliance, I have seen some people lost the money in Reliance. I didn't understand why Reliance you have taken a trade. I didn't see any order flow in Reliance. 75 minutes time frame. Only demand zone there is a order flow in Reliance. 75 minutes supply zone, there is no order flow. We know that Reliance 75 minute zone will be violated. You already learned when a zone will be violated. I am thinking some of you might have adjusted the 5 minute zone just like that. You compromised and drawn the zones. Let me show you. Reliance is a 75 minutes demand zone and daily demand zone and 75 minutes supply zone is there. This is a daily time frame. You have a rally, 3 base candles and a rally. This is the demand zone. This is a 75 minute supply zone. Once we get into 75 minutes time frame, we will look into that. First, this is a daily demand zone. And here you have a order flow, but that is also tested. So let me go to the 75 minutes time frame. Here you have a drop, 1, 2, 3, 4 base candles and a rally. This is the 75 minute zone. And this is the 75 minute supply zone. Drop, 2 base candles and drop. This is the high liquidity supply zone. Now let us go to the 15 minutes time frame. So in the demand zone, you can say this is a leg candle, 2 base candles and rally. See, this is a compromised zone. Why I need to compromise? Because within the narrow range, these 2 candles are moved. That's why I consider this is a leg. And some people don't agree. They say this is a base candle. Yes. But I am considering this as a base candle, legging candle, because these 2 prices are moved within this area. Previously, I think few days back, my HLQ zone, I explained when you can compromise and draw a zone. Same reason I explained you. If you did not listen that video, please listen. That is available in our playlist. We have important analysis videos playlist is there. So this is the 15 minute zone. And what about supply zone? We have 2 order flows in supply zone. This is a rally base drop. And see here again I compromised and drawn. Actually you can ignore this. You don't have a proper leg out here for 15 minutes. But why still I have drawn? By assuming at least if there could be any 5 minutes proper order flow within this area, we can identify with that intention. But 5 minutes you cannot compromise. Suppose let us assume I have a zone, 5 minute zone like this. Rally, 2 base candles and drop. Reject that zone. Because you don't have a very proper good leg out candle is there. 5 minutes, don't compromise. See, there are rare situations, 5 minutes also you can compromise. But you need some experience to understand those scenarios. based on the price action, multiple times rejections, many things we will consider. Time being, you people are not get into that experience level. You are just learning the concepts. So don't do such kind of risky analysis without getting proper knowledge. Suppose if this zone is at 5 minutes, I would have rejected this zone. This is 15 minutes, leg out is not good. Actually, it is not a valid leg out candle. This is a medium size candle. Still, why I am allowing? Because there are some two base candles, they moved in a narrow range way. That's why I am giving, okay, let me compromise and draw. If anything bad in the 5 minutes, I will ignore this zone. If anything proper 5-minute structures are there, let us plan a trade. If other price action clues also support. That was the intention for drawing this. Hope you got clarity. Remember, this is not a 5-minute zone. This is a 15-minute zone. 5 minutes I didn't draw zone inside this. That means 5 minutes order flow is not there inside this area. That anyway we will see once we get into 5 minutes. And also one more zone is also there. We have a rally based drop. This is excellent 15-minute zone. And prices went deep inside. And we know this zone will be violated. And see here also there is no 5-minute zone I didn't draw. That means there is no 5-minute structures are available here. That we will see once we get into. But I didn't understand how you people took a trade from Reliance. I have seen some people took Reliance trade. That is what you are saying. First know where the mistake you are making. I haven't seen any 5 minutes order flow. That I will show you in the 5 minutes time frame. But here at least I have seen a 5-minute zone here. So anyway, this is a 15-minute zone as I told you. This 15-minute zone I have drawn just by compromising I have drawn. I consider this because within the area this movement is there. At least I am predicting there could be some 5 minutes order flow in this area. So let me go to the 5 minutes time frame. See 5 minutes, we have a ERC candle. See, this is a 5 minutes ERC candle, big candle, failed ERC candle. But this you can consider like a rally candle because prices moved. At some point it is a drop candle, again some point it is rally. And here we have a good base candles, 1, 2, 3 base candles. After that a rally candle and follow through candle. Some 5 minutes structure identified. See what happened? From that level, prices went, again moved up. It picked up the order flow. It is a tested zone. So that's why I said this is a valid 5-minute zone. But we can't plan a trade now because it is already tested. But order flow is there. Such kind of order flow, at least even tested also, I didn't find in the 15-minute zones of a supply zone. See the first supply zone. Where did you find a order flow in this area? I haven't seen any order flow. All these are all base candles and this is not a leg out. Definitely this is a medium size. Either leg candle or even you can consider this is also a medium size base. So where is this? This is also not a valid leg out. It's a medium size candle. All these are all medium size candles. This is a medium size rally candle, base candle. This is also a medium size leg candle, definitely not leg out. Maybe you may consider this is a drop, medium size drop, base and a drop. Okay, some extent, okay, this is at least you can consider this as a drop candle, leg out candle. But anyway, it is already violated. See in this here, this zone is violated. So not valid. See again, this you cannot draw, rally, base, drop. This is a medium size candle. And next, within this 15 minutes area, where do you draw the 15 minute zone? See, this is a ERC candle. This is a drop candle. In between there are no base candles. This is a big candle, very big candle. See, the length of this candle is more than this candle. Suppose if you want to consider this as a leg out, this length is more than this candle. So you cannot draw a zone here. There is no convenient picture here for drawing zones. 5-minute zone. Even if you draw something, here see it completely took the order flow. It came very close to the digital line here. It didn't pierce, but already it consumed all the order flow in this area. Maybe you would have drawn this drop, base, drop, but here again it consumed the order flow. Maybe you want to consider, anyway this is a leg-in ERC candle. Let us assume you have consider this as a base candle, which is wrong. Let us assume you consider this is a rally, 2 base candles, drop. Let us assume you have drawn up to the digital line, but this zone is already tested here. Even if you consider, I am telling you the reason why this zone will be violated. And here there is no zone, all these are all base candles. See here the structure. This is a worst structure here. See, rally, drop, rally, drop, rally, drop. What is happening here? And this one again you cannot consider. These are all ERC candles. See, what is the length of this candle? And here also almost the same, maybe a little small. These are all not valid price structures to draw the zones. If you draw type 1 proximal, that is wick to wick, this entire drop candle, this is a good drop candle, no doubt, but this entire drop comes part of the base, which is not good. There should be considerable amount of body should go out of the zone. Otherwise, those zones will be violated easily. We cannot keep this much big candle inside a zone. That's why these are all not zones. See, easily with a gap up. See, this is yesterday's price, right? So with a gap up, this zone is violated. With a gap up, opening itself is out of this. So that means this zone is completely gone. You didn't get a chance to take a trade in this zone. Anyway, it is violated here. But some of you taken a trade where maybe you would have taken a trade in this zone. So where is the order flow in this zone? I didn't see any order flow. But from where you got the order flow, I am not understanding. Maybe if you would have taken, maybe some kind of adjustment you have done. Maybe somewhere you have drawn a zone here by assuming this is a leg out. But this is a medium size leg candle, or even it can be qualified as a base candle also, medium size. You can use this for leg in purpose. You can't use this candle for leg out purpose. I didn't see any reason for finding a trade from this zone. Okay, anyway, all these zones are violated. We know that this zone will be violated. It happened. So this is about Reliance. And remaining stocks, LTTS is a daily zone. This already we discussed how to fine tune. L&T Technology Services. I already explained this zone, how to fine tune this zone. I think day before yesterday I explained this. It would have displayed this. You have an order flow in this area. So please refer the previous video about how we defined fine tune this zone. Next one is MFSL, Max Financial Services. This is also a daily zone. We have a drop, 2 base candles and a rally candle. This is the way we have drawn this, but below there is a 75-minute zone. Previously we discussed, this is the 175 we drawn previously. And this entire zone is created, a daily zone is created from 75 minutes. Have you seen any such kind of scenario? Do you feel like there was a lower time frame zone, which is the reason behind creation of the higher time frame? Such kind of examples we discussed earlier. Nifty, Bank Nifty recently, the zones were created like that only. And these demand zones only pushed the prices up. And today, the reason why Nifty and Bank Nifty are violated completely and reached all-time high, because of this kind of lower time frame zone. That is what we discussed in Nifty, Bank Nifty, detailed analysis video. Only thing we didn't expect, the supply will be violated so easily that we didn't expect for Bank Nifty, but day before yesterday it happened. But all these are all reasons like this. Maybe institutions recently, they changed their strategies while creating the zones. But anyway, this is a high liquidity demand zone near to this. But I didn't find any proper order flow here at 5 minutes level. Let me quickly show you. That means institutions wants to trap us. They didn't create order flow here. So again, this daily will be violated. They pick up the orders from here and again push the prices up. Maybe this fine-tuned 5 minutes zone may act as a high liquidity zone. Maybe. We don't know. That kind of setup institutions might have set here. So this daily zone fine-tuned with 75 minutes. Here we have a leg candle, 1, 2, 3, 4 base candles and a rally candle. This is the 75 minutes. Inside this 75 minutes, 5 minutes I have fine-tuned. 15 minutes, not 5 minutes. We have a drop, base and rally with hidden body. And if you go to 5 minutes, the 5 minutes I didn't draw the zone. See this candle structures. This is a failed ERC candle. Again another rally. Where is the base candle in between? See, now they look like very small candles. The moment you see, this is the problem with the trading view. When any candles with gap of trading view are changing the real structure of these candles. That's why I'm hiding this. The moment you hide, you get clarity about all these candles. So I'm not comfortable with this zone. So I know this zone will be violated. So if at all any plan, the plan will be from here only. If this is a high liquidity zone, it will work. See the rejection, huge rejection from this zone. The fine-tuned 5 minutes. This is a 75-minute zone. Previously we have drawn this zone. And also previously also, see prices opened just above this zone and again moved up. There is a strong order flow. And recently also see, prices came and again moved up. So next time definitely when prices come, we can plan a trade. This could be a high liquidity area. And when we get the trade, this daily zone will be violated and we get a trade from here. Because the daily zone is violated, people will think that this zone is violated and their stop loss will hit and they all exit with short orders, that is bears. All these bears are trapped by the institutions and after that again it will push the prices up. That is what we have seen recently in both Nifty and Bank Nifty. Last week it happened like that and this week we have seen the complete supply is broken. That is a surprise to me. So that is against our analysis. Didn't expect the whole supply will be wiped out in a single day. That is on Monday. But it happened, we have to accept. But who is the reason behind that? The reason is the traps institutions are creating at lower time frame below the higher time frame zones. This is the daily zone. This is the 75-minute zone. Inside 75, we have fine-tuned 5 minutes area is there. Probably if in this stock MFSL, if this zone violated and picked up the orders, maybe it may give a very good return. That possibility is there. Suppose our analysis is failed. So the zone risk is very small. 5-minute zone risk is very small. Maybe if anything wrong happens, our loss will be less than 1% or even below that only. It's a very small zone, 5-minute zone. And the last one is SBI Life. This is a 75-minute zone. I don't know, we discussed this stock earlier. Lot of order flows I have seen. This is the 75-minute zone, rally 1, 2, 3, 4, 5 base candles and a rally. And this 75-minute zone is fine-tuned with 15-minute zone. Multiple 15 minutes. We have a drop base rally is there. Here we have a leg candle. 1, 2, 3 base candles, or even you can consider this is a leg. Then this will be, anyway, this will be part of the base. 1, 2, 3, 4 base candles. Either way, we have a leg out. This is a 15-minute zone. We have two 15 minutes, but below I have drawn a zone in 5 minutes. Why, I will explain. Next 5 minutes time frame. So here we have a drop, 2 base candles and a rally candle. SIC prices came very close to this fine-tuned area and moved. See the huge rejection. Maybe there is a strong order flow here. And also there is one more zone here. Rally, base, rally. But see how many? 1, 2, 3, 4, 5, 6, 7. That's why I didn't fine-tune this zone. But if we delete this, see here, again order flow just before this, it moved up and see the next follow through candles. That means all these are all rejection, big rejection. Because in 5 minutes you are seeing multiple candle. If you see from 75 minutes, you will see a very big rejection from here. So this is the area we have a strong order flow. See again third time. Before reaching itself, there was a rejection. And now we are expecting prices inside, but they didn't come. But here I have to tell you, there is a 5-minute zone. This could be a high liquidity zone. Could be. See this entire 75 minutes high liquidity. Who is the reason behind creation? This 5-minute zone. We have a leg in, ERC candle, base, rally. Maybe this is not ERC, but this is the way we have drawn the zone. We have a very good rally candle and orders are picked up from this area. Drop, base, rally. Drop, base, rally. From the same area, new zones are getting created in 5 minutes time frame. Definitely this could be a high liquidity area. This is not only high liquidity zone. Why it is important is this entire 75 minutes high liquidity zone is created by using the order flow from this 5-minute zone. By using this order flow. So this is the reason why. Actually it is not 5-minute zone. I think I made a mistake. This could be 1-minute zone. Maybe 1 minute also it might be. When it is 31 January. Sorry, it is not 1-minute zone because 31 January data is not available. Only last 3 months only we can access. This is the base candle. This I consider this as a leg candle. It's not a very good leg. Strictly speaking, you may say this is a base candle. I agree with that. Actually, you have to draw zone like this. Rally 1, 2, 3, 4, 5, 6 base candles and a rally. This is the way you draw the zone. 5-minute zone. But why I minimize it is because orders are picking up from this area. If I draw like this, you get clarity. The real orders are picking up from this area. See, the orders are picked up from this area. Again here orders are picked up from this area. So that's why least level I have managed. I have drawn the zone. See, sometimes, 5 minutes level, you can't compromise always. Sometimes we can compromise. This is one technique. See, there is a strong reason, rally base. But why I minimize it to the least level is because to find where exactly the orders are getting picked up. Till that time we trimmed this 5-minute zone. Maybe we can say this is a trimming the 5-minute zone. Maybe you can draw a 5-minute zone like this. But I trimmed up to this area. Maybe this is the right way to draw the zone. This is even more perfect. This is the zone, this is a rally. But instead of type 2 proximal, I just trimmed up to this area. Within this capital, this could be our 5 minutes stop loss. That way we can. This is a much perfect level now, rather than drawing like this, because now stop loss is adjusted in a much better way now. Okay, anyway, this zone is important. Why I am drawing this? Maybe this could be like act as a trap again, bear trap. There is already order flow is there very strong. Who knows, next time institutions cancel all their order flow in this area and they make sure this 75-minute zone is violated, but below this high liquidity area, they may pick up the orders and again push the price. That possibility is there. Because you are thinking that there are so many rejections are there, this zone is very strong. Next time when prices you will take a trade here. But institutions might have cancelled their order flows. Easily the zone will be violated. This is one possibility I am telling. Don't think that it will happen like that. Definitely we have to plan a trade from this zone because we have a strong rejections from this zone. In case if it is violated, again you have to plan a trade from here. So this is about SBI Life. Anyway, today we didn't get a trade. Today means the last trading session. So this is about high liquidity zones. Hope you have a good learning, especially from Bank of Baroda stock. And those who took trades in Reliance, probably you might have understood the mistakes you might have made. I don't know what kind of mistakes you made, especially those who took trades in Reliance. At least you please write the reasons if possible, if you want to share, so that others also will be useful to others. You can put the comments in the comment section, so that people learn from your mistakes. If you don't want to let the people know about your mistakes, no problem. There is no, I can understand even if you don't write our comments, in case if you feel shy, I can understand. No issues with that. So hope you might have learned from these mistakes. Next time, please take care of your risk management properly. This is my strong advice. And also don't try to adjust the 5 minutes level zones unless you are a highly experienced person. First you take clean trades in the 5 minutes time frame. Even if you miss 1 or 2 because you didn't adjust, no problem. Just ignore them. Missing the trade is not a problem instead of losing a trade. Once your experience grows, you will automatically understand where you can adjust 5 minutes level. You already seen in one of the zone how I adjusted 5 minutes level. But you can't do such kind of adjustment everywhere. There could be strong reason should be there for that adjustment. Okay, I'm going to take a break here. Let us all meet in our next video. Thank you.